Hey, welcome to the Airmere Roundtable. Today is the 23rd of July, 2020. And my guest is Amy Meissner. So welcome, Amy. Nice to have you back as always.
Oh, thanks, Tom. Good to be here.
Yeah, Amy's going to give us an update on the boxcar, which has been going pretty well. I think I haven't looked at the trading results in the last day or two, but let me take a quick
Yeah,
peek.
we just closed a few trades, so a little
It
bit
looks
higher than a couple days ago.
it looks like for the 3 months of closed trades, you're up 14.66%, which is pretty good going.
Yeah. Well, and that's actually based on the account size of the class, which is higher than what I'm actually using. So
Right, so the returns on the actual
returns are
trades
actually,
using the margin is probably higher.
yeah. I mean, they're all Reg T margin, but the even week by week, I'll have a number of trades on each week, and I'm not even getting close to the 15,000. I think there was a couple times early the first couple weeks where I was using more margin, but actually I should probably change the account size of the class to a little bit smaller
Well,
to
even at
reflect the situation.
14.66%, that's a compounded annual growth rate is predicting a 73%, which is amazing. So,
Not too bad.
congratulations on a good start.
Yeah, it was a little bit bumpy the first couple weeks, like I said, but then everything kind of started running smooth. So, yeah, so that's what we'll be talking about today. So, did you want me to read this disclaimer thing, or do you?
Well, I can just go through real quick that Airmere is not a broker-dealer or investment advisor. It's for educational purposes only. Options, futures, and currencies involve risks and are not suitable for all investors. Past performance is not necessarily indicative of future results. If you want to read the whole thing, just pause the video, look at the recording, or go to the bottom of any of our web pages. So that should take care of that.
Okay. All right. All right,
And I
everybody.
think Dan's here too. So welcome,
Oh, good,
Dan.
good. Hey, Dan. Um, so, and then I usually have to uh, minimize the Zoom, the chat thing because it floats. I only have like my laptop right now,
hmm
so it kind of floats over everything. So if anybody asks a question and I'm not answering, it's just because I don't see it yet. So I'll try to keep track of those, or Tom, if you can help keep
If I
track.
see something that needs to be addressed at the moment, I'll try and chime in, but otherwise we'll try and hold the questions to the end.
Okay. Well, great. Well, welcome everybody. So what I'm going to go over today is, as you guys may know, I started a new service called for trade alerts for the boxcar trade that Dan Harvey had shared with me, and that was started a few months ago. I think end of May was the official date, was May 18th or May 20th, something like that. So it's been going for uh, a couple of months. It's actually 2 months. It's only been going for 2 months, not for 3 months. So for the last 2 months, so actually that's a better return right there that you were talking about earlier, because it was
Yeah,
the
it's
end.
only 2.5 months, right?
Yeah, it was
Oh, we're a little
the
bit
end
less
of
than
May,
that, yeah.
a little less than that, yeah. So anyway, so today we thought that I could come on and just kind of recap what the strategy is all about, and go over how it's been performing in the service since we've got it started. So now you can actually see some real results of what's going on. So for those of you, I'm sure most of you know who I am, but just in case there's some new people watching, my name is Amy Meissner. Began trading stocks and options in the mid 90s and became a full-time trader in 2006. I specialize in high probability option strategies. My goal is to have a monthly income with consistent returns, regardless of what the market's throwing at me. And I live in Southern California where it's nice most of the year. So I like to spend a lot of time outdoors. So I tend to try to create or work on strategies that don't really require me to sit in front of a computer all day long. And as far as other things, I've done speaking engagements and presentations for quite a few different trading clubs and educational trading services, of course, here at Aramir as well, and including trade alert services, workshops, and video courses. All right, so that's a little bit about me. So let's just talk a little bit about the boxcar trade. So this is a great little trade that actually was introduced to me by Dan Harvey. It's kind of something similar to some of the stuff that I've been working on, but a little bit different twist. And he's really good about finding these simple, we kind of have a very similar way of trading, and I like that. So a lot of the things that he does are reflective of a lot of the things that I like to do, which are, try to keep things pretty simple, and of course, more neutral in nature, and as opposed to directional, but always, trying to have that nice consistent return over time with a high probability type trade. So it's a very simple trade. And it's extremely short term. It's done in the weekly contract, so it's a weekly strategy. I mean, I guess it's be done every week. So whatever contract is coming up, it can be done every week, and it's suitable for small accounts, really small accounts, or it's very scalable, so it could be used in larger accounts as well. Some of the characteristics and benefits of the Boxcar: it's super short term, so you don't have to deal much. You can a lot of these trades are closed within 5 days. It's market neutral, so there's no need to guess direction. If something happens, then there's an adjustment that you can make here, if it goes up or it goes down, to try to keep you in the trade. It has a high probability of wins, and it's a very low vega trade. It has a very, very low sensitivity to volatility mainly because it's so short term in nature. When you're coming into the last week or two of expiration, there's just not a lot that volatility doesn't really hurt you as much, or help you as much in either direction. It might have a little bit of an effect, but it's usually not too much. I think now, with the way the market's been going, things are a little bit different. A lot of premium has been kind of sticking around because the markets have been moving around and individual stocks have been moving around kind of wild lately. So that might be a little bit different. So every market's a little different. So, but in general, it has a low sensitivity to volatility, and it has a low gamma risk. As you can see here on the chart, it's pretty flat to start off with. So it starts off with a very low gamma risk. So that's kind of nice, which isn't usual. It's kind of a little unusual for very short-term trades. A lot of times they'll have extremely high gamma risk. So this one starts off with a very low gamma risk, and depending on the adjustments that you make, you can keep it that way, or you can get a little more directional as well. It has a very good return potential, as I'll show you in a minute. The drawdowns seem to be pretty low, and it's easy to kind of diversify, so not necessarily doing this all on one index like a lot of the other longer term strategies that we like to do. So you can just do it on a variety of stocks and indices or ETFs to kind of diversify a little bit. Whereas one, maybe the overall market's going down, but a certain sector of stocks is going up, or vice versa, that kind of thing. It has a pretty large range of movement. When I say large, it's not very large, but it's large in relation to the amount of time that the trade is on and it's going to expire. It has a very good positive expectancy. So, I try to keep the drawdowns as low as possible, and just keep chipping away at the winners to allow that positive expectancy over time, and a nice, pretty smooth equity curve, which I'll show you in a moment. And it's pretty simple. It's a simple setup, a couple of spreads, or just one condor. It's basically the base is in it's not a iron condor or a symmetrical condor, but it's it's made up of two spreads, so it's a condor in that respect, and it can be entered with one order. And the adjustments are pretty simple. Usually a spread of some sort, a time spread, a credit spread, a debit spread, that kind of thing. So pretty simple adjustments as well. And of course, like I mentioned, it can be traded in a variety of stocks and indices. In the service, I look for good setups. Sometimes I'll see a stock that pops up over and over and over again, then eventually it might disappear for a while and something else becomes a little more popular. But usually there's quite a few candidates available in the stocks, except for, I try to avoid earnings. So anything that's got earnings coming up, I'll avoid that. So there's certain times of the year or each quarter where there might be a few less candidates available than normal, but that's not a problem since I trade it every week. And it can be traded in indices as well. I like to do the SPX is one of the indices I try to do on a regular basis. So as I mentioned, there's, so that makes for multiple opportunities each week, however many you want to trade. But in the service, it's anywhere from 3 to 6 candidates a week, three to six trades a week, which can be scaled up or down. So it's, really great for small accounts because most of the trades for individual trades just don't really take up a lot of capital, but it can be scaled as well. And it doesn't really require sitting in front of the computer all day. I mean, the market moves around a lot, but what I try to do with these is I try to just look at them after the, wait for the market to open and kind of settle for a little bit. So I'll look like once mid-morning and then once later on in the day to decide whether I'm going to do something or not. And a lot of times things will kind of, change direction as well, especially lately. The contract cycles are 14 days to expiration or less. So like I said, really, really short term. A lot of times mine will be 10 days to expiration or less, most of the ones I do. The planned capital, most of the stock trades in the service average under 2,500. Some of them are, 1,500 reg T margin or less, but there might be a little bit more margin added on depending on the types of adjustments that are done. But I like to keep the average around 2,500 for most of the stock trades. And the SPX, I like to keep those under 5,000 reg T margin, although most of them are a lot less than that, like under 3,500 usually, certainly under 4,000 for the most part. But they start off as, a lot of them will start off maybe, under 2,500 even for those as well for the SPX, just depending on how large of a trade I want to do. So, keeping that in mind, the minimum account size could be as low as 33,000 if you just want to trade one stock candidate per week. And I think I show here that the class was going to be a $12,500 account to handle all the trade setups, but I had changed it to 15,000. And actually, I think it needs to be dropped down a little bit. Really, I'm not using that much. A lot of times less than 10,000, but per week, depending on how many trades I have. The profit target, I look for quick profits if available somewhere between 5 and 10% of the maximum margin. So not 5 or 10% of the maximum profit potential, which is a little bit lower, but 5 or 10% of the actual margin that I'm using. And of course, try to keep losses as small as possible. So just as to show you guys what the results were since the service began, we started the service May 18th. So it's been going for 2 months, about 2 months and 1 week. So just a little over 2 months. And we had a little bit of a bumpy start, the first few trades. I had to get my calculations updated, but after that, everything just kind of started running smoothly. As you can see, the equity chart for the class, starting with a $15,000 account here, has been steadily growing in the last 2 months. So we're up about 14.3%. I just closed a couple of trades today, at the very end of the day. So we're up about 14% off of that 15,000. So, but off of the actual margin used, I think it's a little bit more than that because we haven't really used that much on a week-to-week basis. And there's been quite a bit of activity. Like I said, I'm putting on trades every week, and they're closed every week. So about a total of 36 trades so far. I'm sorry, 32 trades so far. 24 winning trades and 8 losing trades. The average profit is about 127, and the average loss about 114. So like that, in order to keep this growth chart going, you want to keep the losses as small as possible. So these are just the averages. So this is a nice little statistical performance that Tom has calculated automatically for each of the trade alert services, which is where I grabbed this from. And then over here on the right, you can actually see all the different trades that I've done since the start, the dollar profit and loss, and then the profit and loss based on the margin. As you can see, it's been pretty good. I'm trying to get like 5 to 10%. A lot of them are, 7, 8%. Some of them are 5. Some of them are higher. The last trade I pulled off today was almost 12% up. Had I kept it on a little bit longer, I probably would have gotten a little bit more out of that. But and there's some losing trades as well. I try to keep those as low as possible. Most of them are pretty low. The only one that was kind of an outlier was this one in the beginning that kind of got away from us. But for the most part, they're pretty reasonable to keep the equity growth chart going up. And they're not like, the ones I put on, I'm not putting on a lot of margin. I'm not, you can see here the maximum margin required for most of these trades is under 2,500. Some of them are under 1,500, I think not the highest one I had was at the beginning. I had one that was a little bit, got a little bit too wide of a spread. So I started shrinking those down to kind of bring the maximum margin used a lot lower. So you don't, need a lot for these trades, which is nice. All right, so with that, I don't know if there's any questions I need to answer. I don't think so. I'll just get started on a couple of examples of some of the trades that, that were recently closed in the service. So so these are actual trades that were done in the service, and they were recently closed. I'm not going back too far, just a few of those. So here's the first one. This one had an expiration of July 10th. And these are the kind that, we really like to see, where you just start the trade, everything's looking pretty flat, and you've got a pretty wide range. You can see this red line, which is T+3. So, usually I put these on towards the end of the week. So usually a couple of those days are a weekend day that, we're not trading. And you can see it, has a pretty quick theta decay in general, so that as the market moves or the underlying moves, you have some breathing room that's kind of built in to these. And so this one was started I guess on the 30th of June, and 2 days later on the 2nd, before the long holiday weekend, 4th of July, even though it kind of popped out of the tent, it still had enough theta decay to bring in a profit of, it's showing here about 8%. So after slippage and commission, maybe a little over 7% or so. So those are obviously the kinds of trades that we like to see. Of course, we'd rather have them close inside the tent here, but you get what you get. So, but it's nice to be able to just take a quick profit. So that was a nice, easy one. Here's another one that also was that same week with the expiration of July 10th. And this one was started on the 2nd. Again, you can see this nice flat, start and some pretty, decent theta. The vega is pretty small, but it doesn't really reflect much. It's got, basically no gamma. And I try to do the best I can to get these outside of one standard deviation. Sometimes they are, and sometimes they aren't. But the most important thing is the range that I'm getting in the future, T+1, T+2, T+3 lines, which is where I'm really, I'm not going to take it into expiration, so or try not to. So that's what I'm really looking at. So this one was started on the 2nd. And after the 4th of July weekend, so we had that 3-day weekend, it kind of actually went up a bit. So I think we started off at 31.40, must have been the SPX trade. We went up about 27 points, and actually probably a little bit more than that. And so this one obviously needed an adjustment, so the graph looks a little bit different, but it's got just basically adds to the theta. And in this particular case, you can actually use an adjustment. There's different ways to adjust these, but in this particular case, I decided to use a calendar, which actually ended up flipping the vega to vega positive, but it also added a lot of theta, which is what I wanted to do. So, so sometimes, I want to keeping under the tent. In this case, this worked out really well. We ended up, another day in the trade, and it was showing a profit of over 7%. So it was, hit the profit target, time to take off. For some folks, they might, want to choose to stay in a little bit longer and try to go for more profits. I think, Dan, you like to stay in a little bit longer on these, but if I can find a profit quickly, it doesn't always happen, but if I can, I'll take these off sooner than later. What I have noticed lately, though, is that some of the premium's been a little bit stubborn. Theta decay has been a little stubborn lately because we've been having so much uncertainty and chop in the market going back and forth that I've been kind of forced to stay in a little bit longer than I like sometimes. But this one, 5 days in the trade, 7% profit, good enough. Okay, so now going on to the 17th of July expiration, another trade. Again, they all kind of look the same. Sometimes they're, I can get the graph outside of one standard deviation. Sometimes I can't. But the main thing is to, try to keep this nice and flat and try to have a good, quick theta decay while having protection to both the upside and the downside. So 2 days in the trade. This one kind of, again, moved up quite a bit. I don't know what stock this was, but it started at 252 and it was up $8 a couple days later. It's a pretty big move for this particular stock. So it's like 4%. So I just wanted to get that under the 10. I decided to use a calendar as well. I like using the calendars in these a lot just because it brings in a lot of theta. It does flip the vega around so that if I do have whiplash going back the other direction, which a lot of times has been happening in this particular type of market. So, this particular type of adjustment allows it to have that whiplash without hurting the trade to the downside, where some other adjustments you might need to do other things in order to not have that happen. And then here we go. In this case, it kept moving up. So it was not a winning trade. I was able to keep it under the tent, but there was no need to keep it on. And if it kept going up, I was going to lose money. So I just wanted to take it off. So I was able to take it off, but it was a really small loss. So, they don't always win, but, it could have a pretty big move. So in this case, it's already up 268. It started at 252. So that's an 18-point move in a $260 stock. So it's a pretty big move in a very short time, just in a few days. So that doesn't always happen, but if it does, I'm not looking at too worried about it, because I can usually get out for a pretty break even or a small loss kind of thing. And since I'm doing multiple ones of these, hopefully that'll be made up by some of the other trades. Okay, this one also a 17th of July expiration. So here we're actually able to get quite a bit of, outside of the one standard deviation in this case. A couple days in the trade, and this one was another one where we had some moves really going up. So over, what about 35 points to the upside? Actually, it was up earlier in the day. So obviously, I'm adjusting this trade, keeping it under the tent, adding a lot of theta, and kind of, in this case, it flips the vega over. And then 6 days in the trade, you starting to peel it off, and eventually getting to the point where it just could be peeled off. And in this case, for a 6% profit, which isn't so bad considering it had a pretty good sized move. So I think it ended up at 32.11. It started at 31.58. So you're talking within 6 days, pretty decent move. Still able to pull out a profit, which is nice. All right, let's look at one more. The 24th of July. So this was actually just recently. I would show you the other two that I just did, but I just closed them out today, so I didn't have a chance to get the graphs and stuff in here for those. But the first, I had one of the trades for this expiration cycle was one that, obviously these are the kind that we really like, where you start the trade, and then of course the next day or 2 days later, in this case the very next day, even though it's coming outside of the tent, I'm able to close it out for over 7% profits, in this case over 8%, before slippage and commission. So, so those are a few examples of some of the actual trades that were done in the service. I don't know if there's any questions. Do the P&L you list net of commission fees? Yes. So I actually do include $1 per contract commission for opening and closing, and plus the fees. So I do include that, and slippage as well. So yes, it does. So that would be like, so on these charts, it's only actually including the opening commissions and any slippage. The closing commissions are not showing up on here, but they do show up here. So if I go back to the performance, once it's completely closed, it's showing the actual for that particular trade, including the commissions on that as well. Let's see if there's any other questions.
There was one, any adjustment on the upside or downside?
Yeah, so there's adjustments to both. So if it goes too far up, like you can see here, it moved up quite a bit. I adjusted to the upside. In this case, I did a calendar to put it back under the tent. I didn't have any recent ones that went to the downside. Actually, you know what? I should have looked for one of those. But yeah, so I would probably remove a put credit spread, and then if it continued to go down further, I'd probably just close it for a very small loss. Sometimes that would be a profit, depending on how much time has passed in the trade. So, so yeah, there are adjustments that I do depending on what happens to the underlying. So basically, and yeah, let's see if there's more. Do you center your calendars at the money? Yeah, I do, Dan. I actually like the at the money ones. It gives, it's got a lot of premium. In some cases, I might look at putting them outside of that. Like, if I think it's going to continue to run up, maybe I'll put it, further away from the market, so it has a little bit more room to maybe make a profit. But for the most part, I feel like the at the money strikes seem to give the best bang for the buck and allow the trade to reverse and whiplash back in the other direction. So I kind of look at what's the best risk reward. I can always add another calendar. So yeah, and I found that they're pretty nice. I mean, you add a little bit of margin, you're putting, as opposed to the removing one of the put debit spreads where you're taking some, you're allowing the left side of the graph to move, to have less risk. It doesn't help you if it starts moving back down. You have to fix that if it starts to whiplash back the other way. So what I found is the calendars tend to help with that. And since we've been having such choppy markets, it seems to be one of the better adjustments at this point in time, at least, because it adds a lot of theta. It puts us back into the tent, obviously, so it adds a lot of theta. It flips the vega the other way around, but again, you don't have too much vega risk on these really short-term ones. And if it does decide to reverse back and go down under the tent, you still have that additional hedging that's still in place there. So I kind of like that. I've actually been playing around with some other versions of this trade using the time zone strategy that I do and some other things with some butterflies. So we'll have to chat about that, Dan. So with the trade alert service, and then Paul is asking, will you enter trade when IV is low? Usually for these, I look for enough premium on the puts to sell, enough premium in the puts. So these are trades. So when I look for candidates, I'm actually looking for stuff where the IV is a little bit higher. So there's usually, even when the overall market has got a lower IV, there's usually plenty of stock candidates where their IV is high enough to give enough premium to put these on and to find good candidates. So basically with this service, what you get with the service, if anybody's interested in signing up, there's again multiple trades each week. It'd be like multiple stocks, and usually right now I'll put one on the SPX as well. I send out the alerts real time via email and SMS, depending on how you set up your settings, but I'll send them out SMS text messages and via email for all the opening, adjusting, and closing trades for each of these trades. I did a kickoff video with guidelines on how to use the service. So, if you're a subscriber, you can watch the recording of that so you can kind of get a good feel for what's going on and what's going to happen. I do weekly video recaps every week where you guys can come on live and ask questions, and I kind of go over the trades and what's going on during the week. And of course, you have access to everything on the class page as long as you maintain your subscription. So that includes all the videos, trade messages, trade history, and so forth. And it's basically, continuing on with a special of 99 bucks a month right now. And the first month is 50% off. So you only pay 50% for the first month. So if you're interested in signing up, it's real simple. Just go to aramir.com/boxcar, or if you're on the Aramir site, I think, Tom, you have some kind of, link or whatever to get to different classes. I go to the site.
Yeah, but the easiest one is just aramir.com/boxcar.
Okay, yeah. So
I'll put it in the chat too.
Put training and an all training, and I'm obviously have a link here, but if I didn't, I would click on learn more or something, and I would go to that page to sign up. Oh, thanks. So Tom just put in a link. Great. So is there any other questions about this?
I was just curious, how often would you say you have to make adjustments on your trades?
Lately it's been more than I'd like, but it just depends on the trade. But we've had a lot of stocks that have just kind of running up a lot. So I've had a lot more stuff going on the upside than the downside. But they're easy adjustments. Just put on a calendar or take off a put debit spread or something like that. So it's pretty simple. But you know, that there are still plenty of trades where I'll put it on and then a couple days later it'll be you know, in the profit zone and it could be removed you know, pretty quickly. Actually, some of them I've been waiting for 7% or more profit targets. So if I only waited for 5, I probably would have less adjustments.
And Paul asked, do you have a method to address black swan risks? You know, like a huge move down like we had earlier this year.
Well, it depends on, you know, a lot of times when we have a black swan, it's kind of like everybody throws out the, you know, everything but the kitchen sink, right? So it could be all stocks are going down, but I try to, you know, you try to diversify these so that maybe something does have a big event down and something else doesn't. But if it does happen, it's not like, let me go back here. Let's take a look. So let's say something happened and it happened a couple days. Ooh, that one doesn't have my little graphs. Here we go. So let's say something happened, you know, a few days into the trade. That, you know, you'd be looking at a different, you know, line here. Like maybe this red line is just 2 days into the trade. So that's a pretty big move. So let's see. This looks like it's the not the rut, the SPX. So 3158. So that's about 100. So you still have about a little over 100 points to the downside. But if you know, you woke up and you had like, you know, 7% gap limit down like we had during the original, you know, in March, where we had those big limit down gap openings.
Right.
You know, so what would that be about? Let's calculate that. Was it 3150? 7%. It's about 220 points. So that would be a big move down. And in the case of something like that happen, yeah, it's not going to be great. But, you know, you're not going to be down here at expiration either. You're going to have, you know, it already has a built-in hedge to deal with that kind of stuff. So it's going to be a losing trade most likely, unless, you know, you feel you want to readjust this or if you just want to take it off. But it's not going to, you know, they're set up so that if something like that happens, it's not killing your account. You know, you try to diversify over a variety of stocks. And if something gets a big hit, so in this case, if it goes down over 100 points, it's not that much. If it goes down 200 points, so, you know, somewhere over here, yeah, you could take like a 20% hit or something like that, depending on, you know, how many days you've been in the trade. So yeah, it can happen. I mean, it's not risk-free, but each one of these trades are generally not using a lot of capital. And usually if something does go down or has a big event, like maybe I have one on the SPX, all the different stocks that I might have them on might not have that big of a move for those. So it's kind of relative, but I've had a couple at the beginning when I was trading, just getting used to trading this, where I just kind of let stuff go just to see how bad it could possibly get. And I actually had I think it was an SPX trade where, and it was a SPX and it was also another stock where it just kept going down and I didn't do anything. I just wanted to see like, oh, well, you know, somebody's going to ask me this, what's really going to happen? And I ended up down like on a, you know, 2000, not 2000, it was like it was a SPX trade. So I think it was probably the amount of margin I did, because I probably did like, you know, 4 lot or something like that, was probably like 3,500 or 4,000. And I was down about $900. That was my own personal account. So that's after slippage, commission, and everything. And I just let it go. I just wanted to see what would happen. But then, you know, a couple other trades were up for that week. And then by the following week, it was all made up and more. So I kind of look at it that way, that, you know, if there's a bad week, I'm putting them on every week. It's usually made up in the subsequent weeks. It doesn't take too long to get back up there. What's the time frame to follow your alert, especially adjustments hour day? I'll put in the planning notes, like what I'm planning on doing for the day, but I usually like to do any adjustments. I'll look around like 11:30 Eastern time, something like that, 11, you know, let the market open for like an hour and a half at least first, and then for about an hour, I'll kind of look, do I want to do anything here? Most of the time, I don't like doing adjustments until then, or I'll wait until later on in the day, like the last hour or the last hour and a half in the day. to do stuff, because a lot of times we'll have like a reversal or something. And then same thing for putting on trades as well. And I usually only put them on, a couple days a week. So usually on, could be on Wednesday evening maybe, but most of the time it's on Thursday or Friday, Thursdays or a Friday morning. And I'll usually set out some planning notes to let people know what's upcoming.
Let's see, there's a couple more questions. Will you enter a trade when IV is low?
Oh, I already answered that question.
Oh, okay. Maybe I missed that.
So now Mark's asking, have people received the alerts for the first 2 months reported about the same? I've actually gotten some really good reports from people actually that were posting. We have like a forum, a private forum, and there's been some people posting in there what their results were. And there's actually some people are kind of doing a little bit of their own thing and they're making more money. I'm pretty conservative. I try to be kind of conservative, so I see that 5 or 7% profit, I'll just take it. But some people are waiting a little longer. You're under the tent, might as well take some more theta. So I'm hearing of a lot of really good results as well. I think for people that are newer to trading overall, it probably takes a little finesse to kind of get used to getting trades executed and learning how to put in an order and wait for a good price, or be a little patient, that kind of thing. But yeah, I'm hearing about a lot of really good results from some people that have been posting in the forum, in the private forum. Let's see.
Serge said he's having trouble getting the same fills as the alerts.
Well, the alerts are showing like midpoints, so they're not. I don't even get the same. Sometimes I get the same fills. I'm actually putting on a lot of the trades myself in my own account. I'll send out an alert and then I'll put it on with everybody else because I want it, because I've heard that before. It's like, well, what kind of fills are you getting? A lot of people are getting better fills than what I'm sending out, and some people are getting worse or whatever. But basically, when I send something out, it's at that particular moment in time. That's what the mid price is. And usually you have to give up a few pennies on that, sometimes a little bit more. So I'll put in the notes how much I'm willing to give up for the trade. And since these are like, maybe, couple lot, 2 lot trades or 3 lot trades or whatever, you're not talking a lot of, you give up a nickel, it's like $5 to $15 or something like that. So it really depends on how many contracts you have. It's not that much. But I notice that when I do my own right afterwards, sometimes I'll get the exact same price. Sometimes I'll give up a few pennies. Sometimes it takes me, a nickel. And there's been a couple of cases where it took me like a dime or something, which is so stubborn that I ended up just waiting, and then the underlying changes. And so I just shifted my strikes, which I talk about as well. Like, if something just doesn't come to you, you don't need to chase it, just shift the strikes, or there should be plenty of trade opportunities. You don't have to take every trade. Some of them are a little more stubborn than others, but for the most part, I've been getting within a nickel of the mid prices, putting them in. Now, of course, if you're seeing an alert come through and the underlying changes quite a bit, and by the time you get to it, then yeah, might be a different story, and then it might need a shifting of the strikes kind of thing. I don't know what this is.
And Steve says. Oh yeah, somebody asked about where's the performance for all the trade alert services.
Oh, okay, gotcha. Yeah, I think you need to
update right there.
mine. That's kind of old.
And then let's see. Steve said he's using a TOS paper trading account in real time, and he's getting very similar results.
Oh, okay. Yeah, thanks, Steve. Yeah, and I think it takes a little finesse with getting a feel for entering orders and changing things and understanding how much to give up, kind of thing. It just it doesn't pay to be to chase, really. It doesn't pay to be impatient sometimes either. Of course, if it's an adjustment, you want to make an adjustment. If it's a timely adjustment, if something's changed, let's say the underlying moves in the complete opposite direction after I send in an alert, and then you look at it and go, I don't even need an adjustment, and don't make an adjustment. That's why I try to have that's why I like to have the live weekly meetings, so that we can kind of talk about stuff like that. Robert's asking, how does the trade compare with your other well-known condor-based trades? Seems that it may end up one of your leading trades. It's certainly one of my leading short-term trades. I have another short-term trade called the time zone. And I'm working on kind of a hybrid between that and the boxcar, and it's really good. I mean, normally I just trade it in the Russell 2000, but I'm looking at trading it in stocks as well. So as far as a short, very, very short-term trade, it's one of my favorites. The other ones that I do are more campaign-style monthly trades, like to put on something every month, you know, to have like, consistent, a consistent, income, like a monthly income with those, where you really don't have to do as much, because you're not putting something on every single week. So just a little longer term.
Mark asked about the list of stocks that you trade.
It could change, but when you look, if you you can see, like in the history, I've done, you'll see a lot of repeat stuff: Google, Netflix, Nvidia, Lulu, Apple, Microsoft, SPX, Zoom, lots of different things. I kind of noticed that I see a lot of the similar stuff over and over again, but then things will, change as far as, whatever earnings are coming up, and I can't really trade a certain stock or a certain group of stocks for a while, or something like that, or the volatility changes, and all of a sudden something will look really good for like 5 weeks, and then it's not a really good setup anymore. Now it's something else. So, but I do have some favorites on the list. And then.
And Robert asked about how does this compare to other well-known Condor-based trades?
Oh, I answered that one.
Oh, okay.
You must have been answering somebody else's question on that one.
Yeah.
And then Fayez, you answered Fayez. Yeah, I was planning on entering some new trades. Usually I enter new trades on Thursdays and sometimes Friday morning. I was planning on entering some stuff today, but right now there's a lot of earnings coming up, and there was a lot of action in the market where a lot of the candidates that were coming up, as far as they had a good enough premium on the puts, enough IV, they just had too big of a move today to put anything on. So I'll look again tomorrow morning. So I probably will put one on, unless there's some really crazy nonsense going on tomorrow morning, I'll probably put one on in the SPX tomorrow morning, and I'll look for some stocks as well. If I can't find any stocks tomorrow, it might just be the SPX this week, but it's kind of most of the time there's at least, I gotta go to the history here. Most of the time, like each week, let's see here. So you can tell by the expiration date. So here there was like 1, 2, 3, 4, 5 for that expiration, 3 for this one, 4 for that one. There was that 5 for this one, 3, 4, somewhere between 3 and 5 usually each week. Last week was kind of tough because of earnings, and this week has been really tough just because the markets kind of went nuts today on the day that I normally put them on. So a lot of the stuff that I was looking at, they just had some kind of outlier moves where they were just too large of a move. It doesn't matter like if it's up or down. It's just if it's so big, you're kind of, I'm always worried it's going to reverse or something, and then you kind of get stuck. So I wanted to see how they played out tomorrow morning and see if there's a good opportunity to enter into some of these stocks. A couple that I was looking at today were was hoping for anyway, were Netflix and what was the other one I was looking at? Microsoft, but they just had too big of moves today. So, and Microsoft just had earnings. And Nvidia too was just too big of a move. That was another one I wanted to look at. But so probably tomorrow I'll, unless there's some really, really huge outsized move, I'll probably put one on the SPX, and I'll look for some other stocks to put them on. We'll see. But usually every week around Thursday or Friday, I'll be putting them on.
How time sensitive are the trades? Like if somebody's working or out and not at their computer, generally, how fast would you say they would need to get the trade on?
Well, that's one of the things I try to, teach when we do the weekly recaps and stuff. So let's say I found something in the morning. So I only look a couple times a day. I'm not sitting at my computer all day long. So I look a couple times a day. Like usually I'll wait for the market to open for an hour or so, unless it's a big thing that I just absolutely, something has to be done. I'll wait until like, the first hour and a half, I'll take a look. And then, I'll decide on any adjustments or entering a new trade. But like I said, I only enter trades towards the end of the week. And then usually, again, I'll look like the last hour and a half of the day. So sometime between, not the last 5 minutes or anything like that, but like the, the last, within the last couple hours, hour and a half of the day, I'll look again. So those are the times that you can kind of expect things to kind of happen, unless there's something that just absolutely needs my attention right away. And then if for some reason I send it, let's say I send something out in the morning and you're not looking until the afternoon, you might, depending on what the underlying does, let's say I try to do a trade in, Zoom, and all of a sudden Zoom went up 5 points or 3 points from the time that I sent out the alert. It might need to be, moved up a little bit, or just shift the strikes. But I talk about, and we, those videos that are on the website, on the class page, it goes over like, what to look for in the trades, what I'm looking at, and then all these weekly recaps, we go over that stuff. So that way you would know, as you learn over time, you'll know like, oh, all I have to do is just shift this down 2.5 points, or maybe I just shift part of it down, or whatever, and I'm still getting the correct balance between the put debit spread and the put credit spread, and I know that this is a good trade. The only difference is, of course, it would be if it's different strikes than the class trade, then I might make an adjustment, 2.5 points earlier than you would need to make an adjustment or something like that. So, but that's all, the whole point of this is an education to kind of learn. So,
Well, and Sal says he only trades in the last hour of the day due to time zone, and he's doing fine. Just
yeah,
sometimes he has to adjust the strikes if the markets have moved.
yeah. And I mean, to be honest with you, I prefer the last hour of the day, or the last hour and a half. That's when I start looking. That's when I prefer, especially adjustments. Just because lately, especially, I mean, usually I would say, I don't like doing that with the other types of trades that I do, like, all those campaign trades, because you lose some theta. But these are super short term, and you're picking stocks or indices that have some, have some volatility right now. So usually you still have plenty of premium waiting at the end of the day. And if it has some kind of reversal, you didn't have to get stuck in some, whiplash during the day. So I kind of agree with that as well.
And Robin had some nice feedback. He said to Mark, he's traded it since it started, and it's a really easy trade and likes it. He's got $1,100 of profit in 3 different accounts, but sometimes it's late to get the fills, and he missed a couple of trading days. So overall, pretty good results, and he
Yeah.
likes the trade.
Oh, thanks, Robin. I appreciate that. Yeah, it's fun.
And then Paul asked, do you or any others that you're aware of put on a positive delta position above your long put to capitalize on upward movement?
Dan Harvey, do you do that? I mean, I guess you could. I don't.
Kind of like the M3 idea where you add a
Yeah, where
long
you add the
call.
call. Yeah, no, the call. Yeah, I mean, right now everything's kind of expensive, so I don't really do that. And it's such a short-term trade. I mean, maybe if it was, something that you put on with 2 months to go, like a lot of movement can happen in that time. But I find that just, adjusting with either the put debit spreads, or lately the calendars have been doing really well lately, because there's a lot of premium that you can collect with those, that there's just no need.
Well, and you're also, with the volatility so high, like you said, they're expensive, so you're paying a lot of theta for that call.
Yeah, yeah, exactly. Exactly.
Let's see. And then Robert asked, are the days in trade for losers lower than winners, or are they similar?
Not necessarily. Um, I think it's kind of a mix. I think on the if the market's moving, or the underlying's moving up, it's probably the same. Or sometimes I stay in it a little bit longer, because I'm trying to stay under the tent and seeing if I can, get out of it with a little bit of a profit or break even. The ones that would be lower days in the trade, and a loser, would probably be something where you had a big move down, and you made a little adjustment and it kept going down, and you're like, okay, I'm just out. It's already, I don't want to get too close to the left side of my tent, so I'm just going to close it. So in that case, it might be, might happen really quick.
And then Mark says, do you set alerts of price movement since you're not watching it during the day?
Not really. There is kind of, I kind of eyeball it. Like I talk about it in some of the, if we start to get too far out, you can tell like where break evens are. If we start to get too far outside of the tent, um, depending on what the strategy is. If it's going to be like a calendar, I can probably go a little bit further. If it's going to be something I'm doing with the put debit spreads. I don't want to go too far outside of the tent. So I kind of eyeball it, like, maybe I start looking like maybe halfway between the break even and the expiration line is just a probably good eyeball. And then as far as the downside, it's like once it gets to like maybe a third down, it depends. I mean, if it happens like in your 3 or 4 days in the trade, you might already have a profit. I just take it off. But if it happens pretty quickly, I would probably do an adjustment there. And then if it gets past the halfway point of the tent, starts moving too close to my left side, I would probably close it, that kind of thing. Yes, Paul, the subscribers do have an opportunity to communicate with each other in the forum. There's a private forum. There's also a Slack channel, I think you guys talked.
Yeah, there is, and you can certainly communicate there. That's more like chat versus a forum, which is more persistent messages.
Yeah, and I'm going to try some. I'm actually going to be announcing to the subscribers either I'll put something out this weekend or whatever. I just have to make sure. I was going to try this thing I was talking to Tom about yesterday. It's like this live trading room thing. It's a little more, it's kind of like Zoom on steroids. So you can actually, be there live and see the screen like we're doing with the Zoom, and you can see each other's chatting, but it also has an additional feature where I can actually send out the trades in a separate little window, like my own little chat window that you can see like as little alerts that go off. So I was I thought it might be kind of fun to do that. So for one day next week, I'm going to do like a live trading day. I just wanted to kind of get an idea if people like that kind of thing. I'm not going to be doing like that on a regular basis, like a day trading room or anything like that. But I just thought it would be kind of fun. I wanted to get some feedback. There might be some usefulness that we can get out of a tool like that. So I wanted to get some feedback. So I'm planning on doing that for the subscribers next week. Just to get some feedback on that. So that'll be another way you can communicate with each other, but just for that one day that I'm doing that. But as Dr. Frank is asking, will there be a course with some other, I don't know what that means. Will there be a course with some other firm?
Oh, like the stuff you did with the time zone or asymmetric iron condor or stuff like that, I think.
No, I'm not planning on doing that with the Boxcar. So, I mean, if I do something like that, it'll be here at Aramir. So.
Ooh, I think we're running out of questions.
Cool. Yeah. All right. Well, I think, and we hit an hour, so it always seems to be magically that way. It's looked like it was going to, end really soon.
Be really early, but yeah, lots of questions. Yeah.
So that's good. That's good. So hopefully, yeah, check it out if you guys are interested.
And there was a question that was just sent to the panelists asking about being able to cancel. And yeah, you can cancel anytime. There's no long-term commitment or anything. It's month to month. So try it out. If you don't like it, just cancel. And it's 50% off the first month, so you're not really risking that much. So your reward to risk ratio is pretty good. So
yeah, it's pretty good. So yeah, and I have pretty thick skin, so I wouldn't be sad. I mean, I would be sad if you didn't stay on, but
well, you're always welcome back if you leave. So
yeah. All right. Okay, well, I think that's it. So thanks, Tom, and thanks everybody for joining, and for those who are watching the recording, thanks for watching.
And thanks, Dan, for paying attention and chiming in. And by the way, Dan said he doesn't use calls, but he has other trades such as diagonals and collars to capitalize on upside movement.
Yeah. It's always good to be diversified in that way.
Yep, absolutely.
All right, cool.
All right. Well, thanks, everyone. Thanks, Dan. Thanks, Amy.
Dan. Thanks,
and we will see you next time.
All right. Bye-bye.
Bye.